As the speculation around the tariff imposed by US increases with the Trump administration, historically these issues have had multitude of impacts.
Because exports directly contribute to the economic activity and import takes away from the economic. So if there are zero tariff, I'm the happiest person. This trade tug of war continues to happen.
But eventually led to a lot of unemployment.
Since we are talking about the Trump administration and all this noise, I think this entire thing started in his first term.
So the China plus one story, which has been playing in favor of India.
India has that advantage vis-a-vis some of the other countries like Vietnam or Thailand, which have very small domestic economies, so they can't consume. If the government played it well.
Do you foresee anything coming up for India specifically?
Trump's style has always been to, and so US imports are maximum from these three countries.
Is it like a small turbulence in the market?
The economists in US or the advisors of Trump administration understand that tariff is a double-edged sword. US used to have 9% inflation 40 years back. So it's basically like a collateral damage. What markets dislike most is uncertainty. So, market sentiment, it should not discourage anybody from investing or not. $75 billion was not there, we'll be in deep trouble. Okay. Even prior to the, Trump becoming the president, he was already kind of talking about this.
So welcome everyone. We're again here to talk about beyond just returns and again an interesting topic that we have at hand. As the speculation around the tariff imposed by US increases with the Trump administration, there are a lot of talks and noise in the markets that needs to be addressed. Historically, these issues have had multitude of impacts, ranging from market volatility to supply chain disruptions and even geopolitical tensions. And today we are here to talk about what exactly the impact could be on India, could be on Indian markets especially, and what should the investors do now to brace from the impact. I have with me the MD of Ladderup Asset Managers, Mr. Raghvendra Nath, to help us solve this issue and understand a bit more about what do these tariffs mean and how the impact could be measured for us. So welcome, sir.
Yeah, thank you, Upasana.
So let's start, before we move to the US administration and the noise around it, let's talk about what do these tariffs actually mean and how do they impact the global economy, or especially with respect to India, what is the impact that we see?
So I think every country wants to reduce its imports and increase its exports, because exports directly contribute to the economic activity and import takes away from the economic activity. So if I'm producing more than what I consume, and if I export the rest of it, my economic activity continues to remain strong. Okay, and so every country would like to promote domestic economic activity. Okay, and one way of promoting that is to make substitute products from imports expensive.
Okay.
So that the domestic players, the domestic manufacturers, the domestic service providers become more competitive. And every country wants to protect its own interest. So and that's why the tariffs are imposed. India keeps putting all kind of tariffs onto imports in India.
Right.
And whether it's goods or services, and so does every other nation. And when I'm exporting, I would like basically the least amount of tariff, because my my goods, I would like my goods to be as competitive as possible. In the market in which I'm sending. So if there are zero tariff, I'm the happiest person. So I think so that's the kind of tussle all the time. Right. That while I want to put maximum tariffs on imports, I want no tariffs on exports, and therefore everybody wants that, and that's where the this trade tug of war continues to happen.
Right.
And therefore what I definitely need, I would like to basically have less tariffs on that. So India, because and what I don't need, I would like to put maximum tariff.
Fair. Any examples in Indian context with respect to the materials that you're talking about?
So a lot of basically, I think, for instance, oil is something that we import in India. So because we need so much of oil,
Right.
the government will basically try to manage the tariff either to benefit itself, or to benefit the consumer, depending on what the case is. Steel industry is a classic example, and we wanted to protect the steel industry from the Chinese, supply, because China has such excess capacity, they can keep supply to the to and dump that excess in India, and therefore they can sell it at a discount. So government has in multiple times has import tariff, so that the domestic steel manufacturers are protected, and not thrown out of business. So you can have so many examples like these.
Sure. So there are some examples in the history. So, for example, the earliest could go back to 1930s Smoot-Hawley Act, wherein the intention was to protect the U.S. farmers, but eventually led to a lot of unemployment because then reverse tariffs were imposed by the competing countries as well. Any other examples that come to mind which had significant impact, positive, negative, both?
I think, since we are talking about the Trump administration and all this noise, I think, this entire thing started in his first term.
Right.
If you look at, between 2018 and around 18, 19, and even 20, Trump actually imposed heavy tariffs on China, and that had impact, not only the China economy, and in fact, the impact that we are witnessing even now. Obviously, Chinese factors have also contributed, but one of the factors has been lesser exports to US, and also benefited some other nations because China became uncompetitive, and therefore some of the business actually got shifted to smaller exporters like India or Vietnam or Thailand. So these countries actually benefited from the tariff war. So that's been the case in 21. All this. Certainly, this noise has been around semiconductors because U.S. government want to prevent China from developing capabilities which are similar to U.S. In high tech, or semiconductors and processors and all that, and or to gain easy access to the technology, and therefore they have basically put restrictions on exports as well as imposed tariffs and everything. So that has also had an impact. So India has got positively impacted. For instance, iPhone has set up such a large manufacturing capacity in India. In fact, last year I think they have exported $12 billion worth of exports, and which won't have been the case if this semiconductor, this trade tension won't have happened.
Right. So the China plus one story, which has been playing in favor of India, is that a part of this entire shift to manufacturing?
Can happen, and it may continue to play around, because I think the one outcome, and from a corporate perspective, they want stability. They don't want that their supply chains get disrupted. Okay, so if there is political action, it will result into some amount of activity on behalf of corporates to neutralize that impact, and continue to basically have multiple points of supply. So this China plus one will continue to basically, kind of grow forward, as a strategy for a lot of multinational businesses.
Right.
Another factor actually is that also the demand component, the domestic demand component. India today is also becoming a very large consumer of a lot of products, whether it could be iPhone or watches or shoes and so many things. So basically putting up a capacity in India which can cater to the domestic demand, as well as provide an alternate to, let's say, a facility in China, is a very easy thing. And so India has that advantage vis-a-vis some of the other countries like Vietnam or Thailand, which have very small domestic economies. So they can't consume all that they produce. They will have to necessarily export. Whereas in India, a large portion of that capacity can be actually utilized, and which will bring in more efficiency, and more margins for that company concerned.
Interesting. So what you're saying is that as we say, the domestic power of the economy also aids the fact that if anybody is choosing India as a manufacturing destination, they have both the opportunities to cater to the domestic market plus cater to the global market as well. Whereas the other smaller economies might not have that
True.
power with them.
True, and I think the if the government played it well, you can actually see lot more capacities by foreign players getting set up in India.
Interesting. And with regard to the Trump administration, till now, most of the impact has been seen primarily, or even speculations have been around either Canada or China or Mexico. There have not been enough talks about on the negative terms about India. What do you see happening there? Do you foresee anything coming up for India specifically?
So I think if you look at it's like basically Trump's style has always been to kind of first announce and then come to the negotiating table. So threaten and then
Right.
negotiate, and which has been the case in both Canada and Mexico. That he imposed 25% tariff and then next day withdraws it for a month and then waits for the response from the other side and then probably settles somewhere in between, or not, may not impose at all. Let's see how it goes. So because these three were the biggest exporting nations to US, and so US imports are maximum from these three countries. Because Canada and Mexico because of the proximity, and China because of the global
Sheer
manufacturing
size.
capacities and size and scale and capability that they have developed. So obviously he's targeting them. But that also means that any other nation which has substantial trade deficit with US, or or in favor of US basically, so trade surplus with US and trade deficit to US may also be targeted. So and I think Trump has already mentioned about India in that context. So something like that, there is a possibility, of course.
Fair enough. And in terms of the tariff imposition, where do you see the global economy heading? Will the markets also react like they have done previously? Is it like a small turbulence in the market, a short term impact, and then it stabilizes again? Any trends that you've seen till now?
See, it all depends on the extent, okay, and where it's getting imposed, and how broad it is. So if actually, I think the economists in US or the advisors of Trump administration understand that tariff is a double-edged sword. You impose tariff, so basically, you are basically trying to dissuade the countries or encouraging the countries to import more from US.
Right.
But US should have something competitive to export to these nations, okay? And otherwise, US from a US perspective, imports become expensive, exports do not grow, and therefore inflation just goes through the roof again. So all this work which the Fed has done, which basically brought inflation down from 9%, US used to have 9% inflation 40 years back, and then it had 9%, and it refuses to come down. Even now, inflation has not gone back to that 0.75% which the Fed is thinking. It's still hovering at around 2.5, 3. It is just a matter of months. If tariffs are imposed, this inflation can go back to 5-6%. And so why the US has more to lose than to gain, by doing this. But because Trump wants to basically promote domestic industry, so that's the reason why he's using that as a bargaining chip.
Correct. You're right. So the last time also, when this happened, China immediately retaliated the last time as well. There were examples with respect to soya bean, for example. So the major impact was on the US farmers eventually. So the retaliation, as you mentioned, is also to be taken into consideration.
So they import on whatever Chinese goods, but that's basically getting that the higher price or is getting borne by a large population, the entire US population, so to speak. And when China puts restriction on soya, then only a very small portion of American population, which is essentially soya bean growers, like farmers, which basically are in soya bean, they get impacted. So they are far more impacted from that tariff than from an extent perspective.
Correct.
You know, if you are earning 10,000 rupees and you start earning 9,900, it won't matter much to you. Or 10,000 if you are spending, and instead of 10,000 you are spending 10,200, you know, you'll still continue to spend. But somebody who was earning 10,000, if it becomes 2,000, the impact is far higher, you know. So I think, probably they can be disproportionate losses in certain segments because of these unintended, so it's basically like a collateral damage in the
Correct.
entire war.
Correct. And do you think India stands to benefit also from all of this to some extent? Because India, with respect to export, for example, jewelry, or specific cases that we export more, textiles, for example, do you think India has to benefit in these terms also?
I don't think so, because the thing is that India, in any case, India's textile imports are minuscule in comparison to other nations. You know, India had an opportunity, but they lost somewhere. You know, and Bangladesh captured
Right.
it, Vietnam captured it, Thailand captured it. You know, so we are not a major player as far as textile is concerned. Jewelry exports, yes, India has, but if a tariff is imposed, that Indian manufacturers will be negatively impacted. So jewelry or textile, if there is let's say a blanket tariff increase on textile imports in US, because that's a very large proportion of the economy. In fact, I would assume that maybe 80-85% of textiles or whatever is sold in US is all imported, today, because the cost is just completely disproportionate. If you are procuring a t-shirt from, let's say, India or Bangladesh, it may cost you $2, and the same t-shirt, if you procure from US, will cost maybe $10. So the economics are very, very different. So if there's a blanket import or tariff, then obviously the entire textile industry, which is export heavy, suffers.
So any other sectors that you can give us examples on?
I think IT services is one. I think the majority of our US exports are IT services.
Right.
In fact, that trade surplus of $45 billion, which is talked about, in fact, we get surprised. India has a trade surplus with some nation. We are always worrying about our deficits.
The other way around.
So we have a trade surplus, and a large portion of that is because of IT services. So if there's some kind of tariff, obviously that portion of the business gets impacted. So the Indian government obviously has to do that balancing act now, so that at least our exports are not impacted.
Fair. And how about the markets? How do you think the markets have been reacting and will react to all of this happening till now, and with whatever speculations that we have?
So see, what markets dislike most is uncertainty, and all this talk which has happened pre-election and post-election, and blowing hot and cold. You are imposing tariff one day and then suspending it the next day. It just creates uncertainty, and markets don't like it. So there is a fear factor on to what extent can these tariff tensions go, and so like what has happened with Canada, the heated exchange of words and all that, and US and Canada have been such close associates. And if you are basically kind of building those walls in those trade relations, they can last for a very, very long time. These things don't get changed. Once you have created a disconnect in that relationship, it's very difficult to bridge it. So nobody is liking that uncertainty. So if there's a clarity, probably the markets may react favorably. But otherwise, I think markets will keep reacting disproportionately every time a risk shows up.
And anything for the investors? Should they sit tight? Should they act upon it right now?
I think in because there's so much uncertainty, and I think we need to look at which are the sectors which are most impacted if India got into that trade kind of tension with US, and where US imports put some blanket tariffs. I think, as we already discussed, IT services, textiles, jewelry, these are some of the major exports to US. And people need to be careful about investing in these export heavy businesses, at least for some time. But other than that, I think, in any other sector where there's no impact, while there could be a broad based market sentiment, it should not discourage anybody from investing or not investing.
Understood. Perfect. So nothing to do, in terms of a drastic reaction to the speculation. Nothing to do right now for the investors.
I think so. I think these are political maneuvering which continues to will continue in some form or other. I think most of us are moving away from that whatever arms based warfare. So this is now becoming economic warfare, can have far bigger repercussions on anything, and that's what is happening. So in some form or the other it will continue. And from a US perspective, indeed there is from it was always a free market economy. In fact, it's done well because of the free market economy. And let's say this new administration is trying to change the color of that. Are they actually intending to do that, or just basically making sure that other countries are importing enough from US? Let's see how it goes.
So Trump has called India the biggest tariff abuser also, and the tariff king also sometimes. But recently, in the current news, we've seen the impact primarily going towards China, Canada, Mexico. Not much for India yet. What is your view on what's going to happen? And if it happens, how risky and how costly could it be for India?
Yeah. I think so. It's like a threat, which is basically because we have such a tenuous export balance, So if you look at, we have always had a current account deficit. We have a large trade deficit. Okay? In fact, the trade deficit, some of the impact of the trade deficit get neutralized because of the strong capital flows. NRI community, I think very few people will know, NRI community remits around $75 billion each year.
Wow.
Okay, $75 billion. We are the largest nation in the world, where the people of the country, who are living abroad are sending so much money. There's no other country of our kind, If that $75 billion was not there, we'll be in deep trouble. Okay. And plus, again, we have these FII flows, FDI flows, which are compensating for the trade deficit. And after accounting for all this, we still have a 1.2, 1.3% current account deficit. So 1.2% of the GDP. So our GDP is, let's say, around $4 trillion, 4,000 billion. 1.2% of that is the deficit, So we can do the maths, So it is a large, because it's only 1.2%, we are still able to manage our rupee dollar parity, to some extent. Okay. And sometime back, it used to be much higher, the current account deficit. So we have to make sure that this current account deficit still stays here, or it becomes better, I think India would want that exports basically multiply. And considering that we have a large export surplus with US, we have this $45 billion surplus with US, it has to be protected at our cost. Okay. Otherwise, the imbalance can be very high. Okay. So from India's perspective, even if US is throwing an empty threat, it should be taken seriously. And I think government has already, I think, there was this statement from Jaishankar some time back, where he said, we are looking at ways and means to basically import more from US. So India is making the right noises. In fact, Mr. Modi is traveling to US now. And there was this news that I was reading that all these agencies, ONGC, Gas Authority, and all is being asked to basically explore importing more gas from US. So, I think, and which is the right thing to do, So if you can import gas from US at the same price at which you can import from any other nation, we should give preference to US, because with that we have a large trade surplus, and we should basically, considering that US is still the largest economy in the world and has a lot of opportunities and upside for India, we should definitely basically focus on improving our trade relations. And it will also work in the other way, because if the trade relations between these large nations like Canada, Mexico, China worsen, and India has a good trade relations, it will directly benefit, from this this entire thing which is going on. So from India's perspective, I think it is very important that we make sure that we are not at cross purposes with the US government, and we find more and more ways to basically export stuff from India in a competitive fashion.
Fair. And in terms of the export also, the goods that we export, are some of these complementary in nature, so that there's not much to benefit for US?
And I think US also understands, because see, you look at IT services is the largest exports. If all these IT services were to be done by somebody sitting in US or was transferred to US companies, the cost to the corporations will go up many-fold actually. And every company in US is utilizing these IT services from India, either directly or indirectly, So I don't think so, because everybody is using some system, some process. For instance, SAP, which is the largest ERP. Almost every large corporation in US will have an ERP solution, which is getting serviced by an Indian company. So all this, it's very complementary in nature. Therefore, I don't think US will view it so adversely, because you can't create those jobs very readily. Or textiles, as I talked about earlier, that the cost of the T-shirt from India is $2. If you have to manufacture that in US, it will cost $8, $10. And the moment you impose tariff, the inflation on these products will immediately shoot up, because no importer will basically absorb this. And the $2 price is so competitive that even the exporter cannot absorb this. So because that exporter is also working on 10 cents of margin in that, so he's already getting squeezed by the importer, in US. So the tariff will actually get directly passed on. So so government will think 2-3 times before basically importing, or putting large tariffs on this.
Fair. Interesting. So a lot of benefits for India could accrue from all of this, and maybe protected to some extent. However, the government will have to act fast in terms of mending or creating stable relationships. But how about the market impact? Will the markets be impacted a lot because of this speculative period, or the period of lull wherein there's a lot of impending decisions to be made? Will that impact the market a lot?
So see, market hates uncertainty, and that's what has got created. In fact, even prior to the Trump becoming the president, he was already kind of talking about this, that if I came to power, I'm going to completely correct this trade imbalance. And this is one of his pitches in that Make America Great Again, that MAGA pitch, which is getting talked about, that all these jobs which have got lost from US, it's unfair completely, and I want to get these jobs back for the American people. They should benefit the most by the US economy, not a Chinese or an Indian. So that's been the pitch. And so so as soon as he assumes office, because that was his main election plank, he starts implementing that, and talking tough. Now, whether he acts tough or not is to be seen, and that's where the uncertainty part is. So he imposes 25% tariff, withdraws it next day, then gives a month time and all that, to negotiate. How these go in which direction, only time will tell. And I think in next 2-3 months it will be clear. And because he's making these giving these sound bites against some of these large nations, and he has already spoken about India. So maybe India can come next. So that uncertainty is not good. And that's the reason why the global markets have been volatile,
Correct.
not only India. And so I think investors should avoid these sectors which have large export exposure to US, which could be IT services, textile, jewelry, which are those exporting companies. But just I think it also presents an opportunity in some fashion.
Okay.
Because what happens is that whenever these fears get materialized, the markets may react excessively. And so these stocks could actually become very, very attractive from a valuation perspective, as at least in short term, if not for long term. So investors may have a good opportunity to invest in some of these sectors if these announcements maybe take some kind of materiality. So I think it is basically right now people should avoid, but they should also keep watching this space carefully and keenly, because you never know that some stock like Infosys or TCS, if it's available 20% lesser or 30% lesser, it could be a great opportunity to buy them.
Fair.
For short term.
So primarily what you're saying is that no knee-jerk reaction is required right now, but it might be a wise thing to continue looking at what's happening in the markets.
Yes.
Maybe you find those pockets of opportunity which you can leverage in the short term.
True.
Perfect. Lovely. As always, it's lovely talking to you. I'm sure our audience also enjoyed this conversation. Thank you very much for your time.
Thank you so much.